Welcome to Java. Thank you very kindly for joining me. In fact, I would like to take a moment to thank everybody that comes on this channel, supports it in multiple ways, whether it's just hitting that like button, even just viewing this and being subscribed. I thank you all very kindly. It's keeping this going. So, with this, it is September 5th, 2025, and it is Friday. So, we're heading into a weekend with a lot of things going on, to say the least. We've got some major things going on in the macro picture, finance, and a lot of shifting going on. Now, to start with, this is a quote from the US administration calling it deepest, darkest China. They are concerned about the alliances that are now being formed along with India joining Russia. So we've got a new axis that is causing concern on these upper levels, but they're also hitting in the financial areas as well. So we've got a coalition here that had a dinner at the White House, and most notably those that are put here at this table of the top talent, so to speak, for artificial intelligence, discussing going forward, as well as investment in the United States and bringing manufacturing back. Now, there's a lot of shifting in this sector as well. So let's get started with what's going on in the markets this morning. We've got the fear greed meter, not surprisingly, after yesterday heading deeper into greed territory. It's put on 5 points up to 57 on this meter. Why? It is because we got poor reports yesterday. So unemployment in the United States rising. So why does the greed go up and stock market hitting new records and some of the other risk assets going up? It's because they are betting on the Fed rate cut is all but solidified for September. So more free money, more easing, quantitative easing. So could be some very serious issues if they do not cut rates in September. So what does this mean in the larger picture is that inflation is guaranteed to continue at least this pace, if not faster. Now, I'm betting on faster. So with this, what are we watching? We see the 10-year yield is dropping as bonds are being purchased. This is all flight of capital into areas where investors are looking to get a little bit more of a return than sitting there inflating away at a rapid pace. Relative strength of the dollar weaker, below 98 now because of a lot of this. So cryptocurrencies recovering, Bitcoin back above 112,000, and the others pretty much following suit. You can see in the percentages that it's the rising tide floating all ships story because it's across the board. Now, stocks did pull up yesterday, as we were kind of speaking about, if that's what happened. Now, futures looking a little bit light, so uncertain, relatively flat. We've got gold is telling the tale of future inflation to continue, staying about 3,600 spot price for gold. That's significant. Now, if it carries on from here, the support levels are 3,500 roughly, and going up could go much higher. So with this, the daily driver that we are looking at today is the job openings fell yesterday to the lowest level in nearly a year. We are getting our non-farm payrolls, and that is what everything is rallying on, in the expectation that those non-farm payrolls will also be weak and solidify the Fed rate cuts. Now we've got more stuff going on with the Fed as well. Barclays is now warning that a lot of Fed dovishness is already priced into the market. And that, in short, supports the same thing, that if they do not cut rates, there is going to be serious repercussions in the market, but also that kind of heading into resistance again. Now, on the global scene, we've got a few other issues that have happened with the bond market now. They retraced, and a lot of that, as I said, was some insider buying and shifting going on. But now we've got bolstering in a couple of different ways. The US President Trump is slashing tariffs on Japanese goods in particular, this is going to be autos to 15%. Now, this does not follow along with the narrative that he was saying that he wants to strengthen the United States auto industry. So one must question really what's going on here. And in short, we know it is because Japan holds the largest amount of United States debt and the treasuries. And if they dump them onto the markets, it could be quite devastating for the stock market. So this is simplifying some of what is going on. But in short, the United States must kind of continue to support, if you will, a couple of other economies, Japan being one of them. Now, the picture that I had in the beginning, we just passed. This is the White House dinner and who attended now this AI focused meeting. But notably, what happened was Elon Musk was absent from this meeting. Now, there were a lot of issues going on with this, a lot of drama. However, he is one of the leads in artificial intelligence, but all of the others were there. There is a lot of desperation in order to keep on the front edge of this, and the United States could be losing some serious ground on this. China's exporting more of their chips underneath all of these bans and tariffs. Now we're going to look at a few other things, but first the calendar. We are expecting prior to the market open everything hitting 8:30. The employment reports and hourly wages. So we're going to watch. The expectation is that they're going to be weak, but if they're outside of a certain value, it could shift the market either way. Now, a little bit more information. German factory orders. This is the headline unexpectedly full. I don't know what they're looking at that this is unexpected to them. Their unemployment rate now in Germany is the highest it's been in years. And they've got less orders. And a lot of this is on the war. So they are losing orders on their tanks, on the trains, and a lot of the weaponry that is going to fund these wars. So that to me is a frightening danger zone because the easiest way to prop these up, of course, perpetuate the war. Now, speaking of war, we know Palantir is behind a lot of this. Speaking of the artificial intelligence that drives a lot of this technology, Mark Benioff from Salesforce. Now, if you weren't aware of this before, you will be now, saying that they beat Palantir on US Army contracts, saying that their prices are just so much lower. Now, their angle as far as their software getting into the US Army contract is kind of on the surface to get in through the business aspect, very similar to Palantir being a data collection, but they're working together and it's not for civilian good. I'll just leave it at that for now. So this is talking about how we are kind of bolstering Japan now because we must, along with Germany. Now, OpenAI, I was talking about the chip wars. They are set to start their own mass production of chips that are with the help of Broadcom. Now, Broadcom just had reported earnings. They're doing very well. So we've got a lot more competition coming into the sector as markets generally will dictate eventually. There's an awful lot of money in this sector. To think that it would all be left to NVIDIA is a little bit silly. So look for a little bit of volatility amidst these chip makers. Now, aside from chips, we've got the cryptocurrencies, which they are kind of gearing towards. Cryptocurrencies versus stable coins. Now, Mara mined a large amount of Bitcoin. This is very positive for them going forward. They also have 52,000 in their treasury holdings. So this boosts them from not just a mining company. I've been talking about this. They mine a lot of this, but they're also holding it on their balance sheets. And this is what is going to pull them through some of the times that are coming. Now, I want to speak about this a little bit more because I think the larger threat is not simply the war or what is going on with the war or the fact that we've got over 23 nations now promising to send troops, all from NATO groups, into Ukraine in order to support them. They're saying it's after the war, but that's still a little bit of a bolster, as well as the recent takedown of a Venezuelan ship under the banner of saying that they were covering drugs. So wars will continue to boost these economies to get them through and also cover what is going on. So let's shift. What is really happening under all of this is a shift in the global financial system and the currencies. So payment systems are at the underlying heart of this. They must get rid of what is left of physical currency, and we're going to do a currency shift from the US dollar being the reserve currency. So companies that are going to benefit from this: Stripe and a company called Paradigm unveiling Tempo as blockchain race for high-speed stablecoin payments speed up. So we've got a lot of these companies now that want to be the underlying rails. We've got Visa supporting more stablecoins in a push for scalable. Come back, my stories. Push for scalable global blockchain payments. So Visa's gotten into this. It's been a while ago. We got MasterCard pushing stablecoins. They've been working on this for a long time. Mass adoption with their new infrastructure. And along with this, we've got Coinbase talking about stable coins being superior. Now they know better. They know better, but they're acting like the first cryptocurrency bank in the United States. They were one of the first that got the charters for this and under the regulations. So they stand to benefit massively by being the main chain that introduces these stable coins on a larger scale. So all of this kind of coming together is just absolutely mind blowing if you can kind of connect the dots as to where we're headed. Stablecoin payment processor now One Money securing 34 US money transmitter licenses. So they're fighting to make this global, of course. And again, the race for global stablecoin rails heats up between Stripe, again, this company again, and Fireblocks. So, what is really at the bottom of all of this is the control that can be put on stablecoins. They are CBDCs, but they're stablecoins. They'll be a little more global. They are eventually looking at dissolving or otherwise getting rid of the Fed. It's coming imminently. Don't necessarily need central banks under the name that they are. They will continue under a different form, if you will. We've got massive database identity info, 252 million people that got leaked online. So, what do we do to help protect these people? Also, bankers intensifying anti fraud efforts as their concerns grow. So, how do we help all these poor people and keep this anti fraud going? Well, of course, we need to institute biometrics, tied in digital ID, fully controllable stablecoins so that we can track them all, track where they're spent, and see everything with full transparency, which is what these are all geared towards. So that's just a little bit of connecting the dots in case you weren't aware of this, or if you're new, or to kind of enforce exactly how they're going about it. They've got their plans laid out now, and this is just a bit of what they're doing. So with all of this, it looks to be another green day, probably with weak payrolls reports, if that's what comes out in the next 45 minutes or so at 8:30 when they do report. So apologies for a little bit of the technical difficulties there with me, but I'm more focused on the content to get this out to you so that you can see what is going on, save you time, and get you going into your day. So thank you kindly for your time. Thank you kindly for being here. I wish you all a wonderful day. And please, my friends, until I see you again, resist.